Celsius has officially filed for Chapter 11 bankruptcy, and we are going to cover all of that information that you need to know right now. So let's not waste any time at all, and let's get straight into today's video. So we're going to go over to my email. Of course, do ignore the 3,333 emails I've ignored. I told you guys I get sponsorship offers literally all day long, so I'm not just lying when I say that I sort through them for the best, okay? But what we can see here is that Celsius did shoot me an email. I do have about $20,000 still locked on Celsius. Hopefully I can get that out one day, but who knows. But what I want to talk about is exactly what they said in the official announcement, my thoughts about it, and what we can expect from them going forward, okay? So moments ago, we announced that Celsius voluntarily filed petitions for Chapter 11 reorganization. That's what they're going to call it, Chapter 11 reorganization. It's a Chapter 11 bankruptcy, but dialogue is important, I suppose. You will be able to find the official announcement here. So, if we go here, they went forward in saying that today's filing follows the difficult but necessary decision by Celsius last month to pause withdrawals, swaps, and transfers on its platform to stabilize its business and protect its customers. Without a pause, the acceleration of withdrawals would have allowed certain customers, those who were first to act, to be paid in full, while leaving others behind to wait for Celsius to harvest value from illiquid or longer-term asset deployment activities before they receive a recovery. This is the right decision for our community and company, said the CEO and co-founder. He said that we have a strong and experienced team in place to lead Celsius through this process. I am confident when we look back at the history of Celsius, we will see this as a defining moment where acting with resolve and confidence serve the community and strengthen the future of the company. They went ahead and said that Celsius to continue to operate. Celsius has $167 million in cash on hand, which provide ample liquidity to support certain operations during the restructuring process. That is a little bit worrying, right? I believe the figure was around $8 to $7 billion worth of customer funds that were on the platform. 167 is not going to cover nearly any of that, okay? So we're not going to go too much farther into this. This is really more just explaining what is happening with the case, but I do want to jump back into the email as they provided us with a little bit more dialogue here. So it says here that these Chapter 11 cases provide the company with the best opportunity to stabilize the business, consummate a comprehensive restructuring transaction that maximizes value for all stakeholders, and emerge from Chapter 11 positioned for success in the cryptocurrency industry. We apologize that communication with our teams and community has been very limited over the past few weeks, and we look forward to being able to offer great transparency with everyone through our reorganization, which encourages dialogue with all stakeholders. For additional information regarding Chapter 11 protection, please watch this video, of course, that is over on the Celsius Network YouTube channel named Chapter 11 Explained. And then they also provide you with phone numbers you can call and an email you can email to get some additional information. They ended up closing this thing out saying that acting in the best interest of our stakeholders, including our entire customer community, it is our top priority. We were also entering this process with the intention of emerging as a stronger company. We thank you for your patience. It is a pleasure to serve you. Celsius. So we saw this from Voyager just a couple days ago. All right, so let's talk about what this means. Is it the end of the world? Are we getting our money back? All that good stuff. Okay. So a Chapter 11, let's simplify what a Chapter 11 is, then I'll give you the textbook definition. Whenever you're talking about bankruptcies, there's usually three main types. You have a Chapter 7, a Chapter 15, and a Chapter 11. Now, generally speaking, a Chapter 11, in my opinion as an investor, has seemingly been the best option, at least within general company and business, right? Whenever I was in business school, we talked about these, and they said if a company ever goes bankrupt, hope it's a Chapter 11. And what this, for the most part, is going to go ahead and say is that they are trying their best to figure out how they can restructure the debts that they owe, get it approved by the court of bankruptcy, to then be able to continue their operations but be protected from civil cases and things of that nature as they do figure out what their next steps are. Now, if it was a Chapter 7, similar to what Three Arrows Capital did, they're just going to say, screw it, we're done, there's nothing we can do about it, good luck, see you later, right? A Chapter 11 generally is more of a restructuring, again, of debts so that they can, in simple man's terms, figure this shit out, okay? Now, sometimes this is more of an opportunity for them to be able to pay off all of the bigger companies they owe and then file for Chapter 7, and other times that is an opportunity for them to truly try to figure out how can they reorganize this to continue with operation and continue with business as usual. Of course, we are given the dialogue saying that we are entering this process with the intention of emerging as a stronger company, and they also did go forward and said that if we go back up to the initial statement, When we look back at this, the history of Celsius, we will see this as a defining moment. So it does seem like they have confidence that they will be able to come through this, but at the end of the day, you can't just talk yourself out of over leveraged positions that put you in a situation where you don't have funds or you are insolvent, okay? So overall, the biggest things that we need to look forward to now is the restructuring plan. This doesn't say if we're going to get our money back or not just yet. There's no way to truly know that until they start to produce the restructuring plan that is going to break down their exact game plan and then be approved by the court on how they planned on restructuring these debts. If we are not included, if we do not see the dialogue stating something similar of paying back of depositors or with, enabling withdrawals, returning money, all of these things, likelihood is they are going to use this $167 million that they have in cash to pay off these big VCs and all of those companies, larger companies that invested into them, and then go into a Chapter 7, which is basically insolvency, saying that they don't have the funds to pay out debtors or creditors, that they can't give our money back, and that they can't really be attacked by civil cases. They're filing for bankruptcy. It's just going to be void, and there's really nothing we can do about it, okay? So the best thing that we need to look forward to from this given point forward is not necessarily, it's Chapter 11, this thing is going to dust, but more that, how do they go forward with this restructuring plan, and does that plan include depositors? Does it mention the dialogue of withdrawals? Does it mention the dialogue of I'm trying to think of any type of thing. Anything I think of, I'll let you guys know. But it will be very, very, specifically important to pay attention to the way they go about this and the wording that is mentioned within their restructuring plan that will be presented to the court here. If we go ahead and we take a look at exactly what happens with this, it says during a Chapter 11 proceeding, the court will help a business restructure its debts and obligations. In most cases, the firm remains open and operating. Many large U.S. companies file for Chapter 11 bankruptcy and stay afloat, such as General Motors, United Airlines, Kmart, and thousands of other corporations of all sizes. Corporations, partnerships, and limited liabilities companies usually file Chapter 11, but in rare cases, individuals with a lot of debt who do not qualify for 7 or 13 may be eligible for Chapter 11. However, the process is not a speedy one. So as you can see, we have seen many major examples of different companies that have filed for Chapter 11 and continued on. Look at United Airlines, right? But that doesn't necessarily mean that Celsius is going to have the same continuation of success, because they have been quite detrimental to the pockets of many people. So for that reason, it will be extremely important to monitor and watch the updates that come with the restructuring plan they submit to the court. And of course, since I do have a little bit of knowledge on this, since we learned a lot about it in school, I do plan to update you guys as much as I possibly can as these things do come out. Of course, if you guys do want to know that. So definitely let me know in the description below. Do you want more Celsius updates videos, especially as this comes out? I think I'll be able to break this down pretty simply for you guys, and I would love to continue to update you. So just again, let me know in the comment section below. But that is the big update for Celsius today. The majority of it is just they're in Chapter 11, they're looking to restructure, and we need to see what this dialogue within the restructuring plan is to see if we are included and how we are included. Personally, I think that if we are going to see withdrawals be opened, it won't all be at once. I think it may be some type of dividend, simple or similar to Bitfinex, or we may see some type of 1% per week or something of that nature over the next couple, months to years as we do slowly see them releasing. I don't think it would be something that would be immediate because, again, we saw what they said. If everyone would just withdrew everything at once, well, they wouldn't be able to cover it, right? So with that said, again, that is about the update for Celsius today. Now, many people have asked me, Tyler, is this kind of the end for lending platforms? Is this the end of these different decentralized finance platforms? And personally speaking, I do believe that in a way it probably is, but I think that there is some hope, just not necessarily in a more decentralized manner. Now, let me a little bit explain about what I mean by that. So I got an email the other day from a company. It was Vires Finance, right? And if we go ahead, you can see their website here. Now, as you guys know, again, I get a shit ton of emails, 3.33 thousand sitting in there, but I go through every single one of them as I can. But I got an email about Vires Finance, and I was kind of like, it's a lending protocol. Celsius collapsed. We saw Vault collapse. We saw Voyager itself collapsing. So I wasn't all too interested, but I was like, okay, I'm a little curious. Let me see what's up. So I wanted to see, what could we possibly see from lending platforms or any platforms in terms of DeFi that could provide an opportunity for people to continue to make passive income, especially in times like these, right? I'm an advocate for passive income during bear markets. It's the best thing to kind of keep your mind at ease. So I was thinking, like, is there a possibility, is there a way for these platforms to continue to be able to pay interest and to pay loans, but also not get destroyed similar to Celsius? And I think the only way that they are capable of doing it is to not be completely decentralized. There has to be some type of governance, there has to be voting, and there has to be the ability to mitigate risk before it is in play. Now, what I mean by that is think back what happened with Luna. With Luna, whenever we saw that thing collapse, I feel like there would have been ways that it could have stopped, the team could have stopped it before it happens. We know that Duquan, we know that the team were overconfident, and that overconfidence, they think that they could never collapse, led it to collapse. But what we saw from something like Vires Finance is that they went forward. They noticed when everything was crashing, when Celsius was crashing, when Voyager was crashing, everything was going down. They noticed that they had a liquidity crunch situation on their platform in which several accounts overextended the protocol lending capacity and were extremely close to default. So what they went ahead and did is they created a proposal on Vires that would move the debt and remaining collateral of these accounts to the account of the owner itself, to then be basically redistributed and to be figured out. How can we close these positions to not make them get closed on default, which would collapse the entire ecosystem? Very, very similar to what we've been seeing from some of those larger overextended positions on something like Celsius, which at one given point was that close to seeing mass liquidations across its entire platform, right? Now, as we can see here, this was put into governance, and through the governance, this was allowed for stakers and voters to be able to vote on this to figure out if it was the best option. And as it did happen, we could see that they have now survived it, right? After 6 weeks, they have made it through the big crash that they were seeing. They got through the liquidity crunch. Some people didn't like it, of course, because it's like, well, how are you going to try to take funds from people in a way? But also people were like, if it's going to save the funds of everyone else because people were being irresponsible and they were this close to being defaulted, they would have defaulted anyway, so why not remove those funds and do it in a much more safe manner to save everybody else on the platform? It seemed to be a much more realistic way and much more of a real world example of what would happen in a situation like this within your general business itself, right? And I feel like these are the type of businesses that are going to be able to make it through DeFi, decentralized finance, but they have to have some type of center point of control that can allow certain things of this nature to happen to save the platform in these black swan crashes like we've seen recently. So Vires is definitely one that I've been checking out. After seeing that, if you're not necessarily a person who wants to check out lending protocols, I understand it's a very shaky time in the market, but I do believe there is potential here, especially considering the fact that they have gone through the crash already. We can see here they are offering some pretty substantial rewards at this point, and over time, as these platforms do get bigger, these rewards do come down. That's almost always the case. When they're newer, they're up really high, and as they get older, they start to come down. But as we can see here, there is lending on things like USDN, USDT, USDC, DAI, BUSD, Bitcoin, Ethereum. There are very high interest that you have to pay on the borrowing APR, but they also do offer some very substantial APYs for actually lending it out. Looking at USDT at 30% plus right now. Now, another thing that they do offer to kind of help protect this, the overall platform itself, is they do offer the ability to boost your rewards by locking in your liquidity. And so what this means is very simply put here, this is aimed to create predictable withdrawal dynamics for the markets at Vires Finance. If the majority of users lock up their positions, the minority that want to exit the protocol will be able to do so without causing large-scale liquidity exit issues. So what we can see here is they have integrated different methods and different incentives within the platform itself to protect themselves from the same crashes we saw from something like Celsius, right? So if that's something for you, I definitely think it's worth the look. I personally don't think it's a good idea to put a shit ton of money into anywhere right now, but I think dollar cost averaging and putting some money into different places has never failed me. Even though I've taken some losses some places, I've seen some great gains in other places, and it does seem like having, the fact that Vires has survived up until this point, and not only survived, but made adaptations and changes to their platform to continue forward. It was one that I wanted to bring to the channel just to show you what it's going to take for DeFi to be able to continue forward. I don't think that completely decentralized is going to make it. I think that said, there's just too much that can happen within times of like these, right? I think a center point of control needs to be able to make changes and adjustments like Vires has. So it's definitely one to check out. Again, it's over here on Vires.finance. I can give you guys even more updates if you would like to, but they are one of the people that I would like to bring to the channel, especially as they do prove themselves during time like these. But with that said, that's going to be about it for today's video. I gave you guys a Celsius bankruptcy update and an example of what it takes to continue through a time like these whenever we are seeing things like Celsius go down. If you did enjoy today's video, of course, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.